but we've seen continual success stories of clients utilizing it to analyze existing and new opportunities, being able to do the work in maybe a couple of hours that would have taken weeks, and also in situations whereby being able to identify risks mathematically that they wouldn't have considered otherwise, and generally speaking, just being really, really accurate when it comes to the actual future performance of the business, where we've continuously compared between what people have done when underwriting opportunities. We consistently come out closer to what actually happens by more than 2.5 times. So the accuracy is very, very high compared to what would have been done otherwise.
Welcome officially.
Thank you very much for having me.
Tell us about your company, your product.
Sure. So Allemuir Capital is an AI investment analytics firm. We started 4.5 years ago. The team has a background in private markets, evaluating investment opportunities on behalf of private equity and investment banks. And we set up our own firm to utilize AI in order to automate many parts of the investment process, both from a speed perspective, a cost component, but also actually from an accuracy. Being able to be unbiased in the assessment of investment opportunities has a lot of advantages, and utilizing technology to make sure you're always got your sort of sources.
When did you start?
So 4.5 years ago, February 21 is when we officially sort of founded the company, and we've been sort of
early players.
Yeah, right? Very much so. And just continue to iterate and improve the products over that time.
And the team is all people with a finance background, tech background.
Yeah, every member of the team has worked at sort of institutional quality firms, sell-side firms, some buy-side firms as well, a combination of public and private markets, but also of experienced individuals, which has been very, very beneficial. As much as we're all very sort of tech forward, and we've all been involved in the AI space for a long time.
You're not just a bunch of guys that decided to use AI for investing.
Yes, exactly.
And you come from a background also at Morgan Stanley, if I remember correctly.
Yes, correct. So myself and my co-founder, we met and worked together at Morgan Stanley, and we then left to co-found the company. She has experience also at Goldman Sachs and another of institutional investment firms. But I was Morgan Stanley throughout as my sort of institutional.
What's the techie?
Well, it was initially myself for a long, long time, and then we've added developers over time, and so we've got a very, very good team and an excellent CTO that leads the charge on that, and I get involved where I can be helpful.
Was it an idea from you or from a team? How did it start?
It's certainly fair to say that I was definitely the initial idea and driving force behind it, but I've been benefited massively by people coming on board and sort of really believing in what it is we're doing and pushing forward. We definitely have a sort of quite single objective in mind that everyone's sort of driving towards.
What's the patient token? What really drives your hurdle in this? Because 4.5 years in such a market, I imagine there's got to be some element of patience.
Yeah, absolutely. Yeah. I think if you don't, there's a lot of those sort of challenges which you're trying to overcome, and sort of being patient and always trying to understand what the right move is, because developing, it's the trust component. Finance and getting people to use your technology to make investment decisions requires people to have a lot of trust in what you do. So there's a need to have some degree of longevity and continuously being available to provide sort of sensible suggestions and analysis. So we've had to sort of continuously iterate and ultimately just solve clients' problems.
What would you say is the biggest challenge you're facing?
It's changed over time, because to begin with, it was about, in a way, convincing people that AI could do the work at all. Before people had even seen the technology, their argument may well be that they don't think AI could do it. It changed. And I think now where we're at is in a very different one, which is occasionally it's changed again. We had a moment in time where people felt that they could sort of do it themselves, that if they get themselves access to an OpenAI, a sort of API account, maybe they could do something.
Maybe now with Perplexity and Comet, right?
Exactly. So that certainly comes up in conversations with people, but again, that's more sort of their feeling of it. And then I think once people see what we've done, it becomes very clear that isn't
different. That's very interesting. Now that AI browser agents are coming out and people can just say, yeah, do it for me, invest for me, make me money. What's the main differentiator between you guys and something like that?
Yeah, so in a big way, we have been building those sort of proprietary, financially focused models for years. So we didn't just start it up, 6 months ago or a year ago even. We've been doing this for a long, long time, and it's something that I did previously. So I've been building sort of systems utilizing machine learning and AI for coming up on a decade now. So we're not trying to apply something from a general use into finance. We built something for a financial use, and that's it. And we've also just had the chance to learn to make those mistakes, understanding the data angle, getting clean and understandable data is such an important point. And it's just something that we've had a wealth of experience in compared to what is out there, right?
What do you mean when you say clean data?
So when you're pulling information, particularly sort of financial statement information, public and private companies, the chances for there to be errors or mismatch or things don't calculate correctly or things don't track as you triangulate them across income statements and balance sheet and cash flow, and does that match up what the company's saying? So all those things, if you have them not matching up, which in the real world or what gets reported doesn't always match up, it really starts to create issues when you're constructing a model that is meant to calculate these things sort of simultaneously and in a connected way. So you start to create these issues if you are not able to actually get to clean data. So the process of being able to identify, create that clean data in the first place is a very, very important process.
So if I use something like, I'm an enthusiast, I want to experiment, I use Comet, other than data, what could be the dangers that I can inquire to, that you have experience about?
Yeah, sure. So I think also there's a general issue with utilizing a structure which is relying solely on the sort of the LLM architecture, because if it's not set up properly, it's trying to skip to the answer. And if that jump is too broad, then it's not doing so with the benefit of actually a sort of mathematical calculation, which is quantifying the impact of different elements. You need to have a structure which is actually going to conduct a framework which is more attuned to classical finance in a way which is, given business performance, given the macroeconomic environment, how do I expect this business to perform? How much is it going to sell of something? Is the price of what it's selling increasing or decreasing? Is there any efficiency gains? Is it thinking about the problem in that way to calculate something reasonable? Or is it taking a sort of pattern recognition of context to generate an output which isn't the same thing, right? There's a need at times, particularly in detailed quantitative work, to actually do the maths. And that's something that is a very, very important task. And that's something that you only get by actually doing it and learning through.
What about the future? What about if ChatGPT or whatever it is get to a point where it's intelligent enough, supposedly, to do all of this? Do you think it's possible? Will you be prepared for that and have a...
Yes, absolutely. As we are always evolving. So hopefully, maybe by the time that ChatGPT gets there, we're again 3-4 years down the road and already onto the next challenges. It's not the important thing, I think, from where we are now is it's not just about the accuracy now of our financial modeling and valuation work, as much as that's very, very important. We're now connecting that across multiple transactions, allowing people to interact with their entire portfolio, understand the risks in an aggregated way, generate reports across the board, allowing them to add in new deals. And what does that now look like as part of my portfolio? Yeah. So it's not just the other firms may eventually get there in terms of one particular element, but then they're still behind when it comes to the overall offering and the overall way that people are working. We're not just building a financial modeling framework, it's actually sort of an operating system for private markets investing.
So you have also your own proprietary technology. You're not a container, as they call it, right? Container.
Yeah, correct.
Big moat and also a learning factor in it, right?
Yes, completely. So there's such a big component that we're continuously improving, continuously learning, but it's very much a proprietary structure that is designed for each individual task and then displaying that information appropriately. So
what would be the biggest success story or stories that you can share?
Sure. We've definitely seen a lot of success in different portfolios. There's maybe not an individual deal that I can speak to because we work with clients on a very private basis. And when we offer the platform out to clients, they may not share with us the data's in the system, but we don't have access to their data. We make sure it's very much encrypted and private to themselves. But we've seen continual success stories of clients utilizing it to analyze existing and new opportunities, being able to do the work in maybe a couple of hours that would have taken weeks, and also in situations whereby being able to identify risks mathematically that they wouldn't have considered otherwise, and generally speaking, just being really, really accurate when it comes to the actual future performance of the business, where we've continuously compared between what people have done when underwriting opportunities. We consistently come out closer to what actually happens by more than 2.5 times. So the accuracy is very, very high compared to what would have been done otherwise.
What about monitoring a portfolio of companies? Just monitoring.
Yeah, so that's something that we're releasing new features in the next 2 weeks, and we've been adding in sort of natural language widgets as part of analytical dashboards, so that as information about companies, if it's in the public domain, like news flow or specific reporting to companies being uploaded by the portfolio companies themselves, it's being automatically updated into their dashboards. So clients are able to actually see how the individual businesses and the portfolio as a whole is performing. So it's really bringing private markets into that instantaneous information flow that maybe public markets has existed in for a little bit longer. So it's sort of skipping a step in private markets and bringing them right up to date, so that information gets uploaded and within the day they are now aware of it, how it affects them, what does that mean for performance, what does it mean for valuation, is there ways that even they could potentially resolve these issues, is there things they could get involved with, is there people in their network that they know. So all these things are now sort of available at their fingertips, whereas even 6 months ago, and for lots of firms still, they're managing their portfolios in Excel spreadsheets and waiting for the company to tell them what the valuation is. And to think the leap from that to where we are already is enormous.
Just this is massive. Yes, not without hopping from one tab to another. Yes. Let's see if, believe it or not, a lot of people are searching for how to build it yourself, or to build an investment bot. So from someone that went through it in the past 4.5 years, could you share about this?
If you're going to do it yourself without maybe giving away all the secret sauce, is building up brick by brick. What are each of the individual components? If you were to do this by hand of evaluating something, what are all the pieces you would do? We have an entire modeling structure just to understanding the macroeconomic environment that a business is performing within and what the drivers are of that. We have underlying models to understand any individual valuation piece. We have models to understand balance sheet risk performance. We have models to understand what the impact is of a 1% change in accounts receivables 2 years from now. Each individual component, how can we be more accurate in that piece and therefore connect it across everything? And what is the result of that? So it's really a layering. It's taking very, very powerful architecture, but being really specific with it and precise, so that we can then deliver something in total which is greater than the sum of its parts. If you're trying, the challenge at the moment really, and we do see this a lot, the foundational models are incredibly powerful, but they make it easy to think that you can create something in a simple way of, well, if I just upload this information, I ask the question of how valuable is this company, I get an answer. And if I just glance at it, that kind of looks okay. But the moment you start to go into work and you're then comparing it to an investment team of 5 people that's done the underlying work, it can start to deviate really, really rapidly. So if we have gone through the work to basically replicate each of the individual pieces of work that a 5-person investment team would do, then we're effectively being able to improve each element of that process and ultimately end up with a better answer, but be more accurate, have done so in a quick way. We've basically gone through the sort of classic process of automating each of those points rather than trying to skip across, because as effective as they are, the LLM architecture is still taking context to present a answer based on the context it has. It's not trying to actually conduct the work in the same way, and that just leaves you open. The reality is not just to utilize that in a big way, but actually to go piece by piece.
And that's why probably you are in the 5% of projects that are not failing on delivering ROI. 95% of the projects MIT share the report, they are actually failing on delivering ROI, right?
Yeah, absolutely. I think that where we're seeing a lot of, and where people are getting, where we do get feedback, or when we're speaking to new clients or where they've tried others, it tends to fail on that point because it's a reworked version of an LLM that's jumping across, and therefore they're just not getting the answers that they need.
Thank you very much. Okay,
yeah, exactly.
So Andrew, we spoke a lot about the software. Let's actually see it in action. I'm curious.
I've got to make sure that we see these things in action. Otherwise, it's
yeah. Already AI is very abstract.
Yeah, absolutely.
People, right?
So I've uploaded an example for us to look at here. So when clients are using the platform, they upload the information. We often see, large zip folders that have been downloaded from data rooms from underlying company. And then we go through pre-processing in the back end. So that's stripping out information, historical projected financials, management team. Can we connect to their CVs? Can we understand geography, sector, industry, market, competitors? That's basically creating a localized database. And we can then connect that to a global database of information, news sources, comparable transactions, maybe even comparable deals that we can look at the sort of company specifically. And then we can interact with it as an experienced analyst to do everything from understanding the management team to elements of the financial modeling. So if I wanted to ask it to provide multiple methodology evaluation analysis, for instance, and that's all items that can be conducted within the platform itself. And it's also a really, really big point is that because it can rely on the underlying analytical work that's been conducted, it can be much, much faster to do in-depth work, particularly something like the financial modeling piece that obviously is very, very time consuming for teams to do. And we can also utilize that information to generate large reports. So things like investment committee memos, reports that need to go out to external stakeholders. They could be LP investors in a particular fund, or if you're looking to present a deal for co-investment, whatever it may be. So as an example, we can demonstrate these sort of large investment detailed analytical work that goes through the market, that goes through the company's performance. It can provide recommendations. What is the landscape? What are all the assumptions, the methodology? So this is just it takes a couple of minutes to produce a sort of full report like this. And you'll see, this is what the company's provided as their forecasts. We've done a reforecast utilizing our own underlying structure. So it's all very detail-oriented work that we can then present accordingly. And within the sort of chat functionality itself, you can go through and continuously iterate and request information. What is the methodology? Where's it coming from? You'll see everything is sourced from underlying financial models as well as what we've done. So it's a very easy to use platform, as if you were interacting with an experienced financial analyst. And that's ultimately the most important thing for us here. And it's to link both the quantitative, qualitative elements and producing the materials that are needed in order for it to be very, very quick to use. And yeah, I'll just highlight something there for us to look a little bit more at the qualitative elements of what the competitive environment is. We've seen this being used to understand the management team and their experience. Is there gaps in their skill set? Can they be filled with hires or advisors? Is there weaknesses in the operating structure? Is there a sort of revenue concentration with particular customers? What does the impact look like if you remove any one particular customer? What's the likelihood of that customer leaving? Is there elements that we can look at from broader risks, either in terms of external macroeconomic environment, how sensitive are we to those items? So this is all work that can be done in a very, very detail-oriented way and then put together into the reports for external use. Although increasingly, we hope that people will work entirely within the platform, and we facilitate that by allowing teams to work together. So teams can work through chats and documentations, see what's the kind of work that they've been doing, ask them any particular questions or highlight areas for them to sort of consider separately.
Beautiful. I like how void of fluff it is. Every sentence just gives me data and nothing more.
Importantly, what you need, Where the information came from, for us, a big point is to develop the trust that we need. We need to provide where the information is coming from and what we've done with it. Not that we're quite as detailed as 2+2=4, but we should, as much as possible, if we're doing something like a discounted cash flow, here's my revenue, here's my expenses, here's my capex assumptions, here's my net working capital, here's my discount rate, here's my sort of PV, here's the subtotals for each year, here's my terminal value calculation. I've aggregated those to get to this EV. Here's my adjustments for debt and net cash, etc. So it's working through each of those that just gives people, okay, I can check it, I can see it, that makes sense, I can see where that's come from. And we're continuously making improvements. We've got a very, very good and collaborative list of clients that provide us with feedback. We take it on board and we sort of work through priorities in terms of how we can improve both the user experience of existing items and building out new features that allow them to work in a more and more effective way.
So a part of these was an autonomous investing agent, but you said few people are still making the jump into that. Will you hate me if I define this part of the software as a co-pilot for an investor?
No, I think that's totally fair to say. We have structures in place which are much more autonomous in making sort of investment decisions and generating full trade ideas. We provide investment recommendations as part of this structure, but don't take full discretion. It is describe it as a co-pilot.
You got cut off, so I lost the last.
Sorry, that it dropped out for a moment. Then maybe I can. I will just
move over quickly to the speaker instead, and maybe that's better.
Yeah.
So so the important element for us is to work on a structure which both acts as a co-pilot and then can increasingly take autonomy where clients would like us to do so. On individual tasks, it can act increasingly agentically, but we also give people the ability to structure something. So we do work with clients to create, and they can do it themselves, to create templates for files and documentations that they want to see on repeat. Many firms have structured investment committee memos that they have a sort of repeatable structure. So we can create that template and they can do so themselves. And then it all connects up through that. And obviously that's acting as a co-pilot, or you can request an investment committee memo as an example, and it will build it entirely independently. So we're just increasingly giving clients the option of how much they want it to be either a tool or to act autonomously. Yes, it does. So it does work across languages, but it is something that we're actually looking to improve more so. So we want to build out increasing features, allowing people to work across languages, because we're increasingly seeing a demand, particularly outside what's traditionally been sort of English-speaking clientele.
Yeah, I might have some Italian investors that could be interested. And let me tell you, it doesn't need to be perfect right away as far as language goes or anything like that, because it already delivers lots of value. Do we want to see something about the agentic part? Do you have anything about that?
I might not be able to. I don't think there's anything I can particularly show here be sort of agentic, or would be anything particularly demonstrable of this agentic behavior, because it's mostly in sort of generation of investment recommendations of how we link it up with specific clients. So I'm not with anything particular I can show there that would provide sort of clarity or anything of incredible interest. Structurally, we do deliver it for clients in different ways where we're building out their portfolios specifically. And so it has much more of an end-to-end authority from data collection to a recommended investment portfolio.
Do you think it would be possible to make, many apps have that, like a fake portfolio, a fake investment account, and see what the agent does in time without real money?
That would be not something we've done to date.
No, not today in general.
Not to date. Yeah, so far we've worked with clients on portfolios that are around sort of 25 million plus, and we create the portfolio specifically for them. We connect it up with our structure, but actually we work with the clients to optimize for particular dynamics. So usually we work with them in terms of they're looking for exposure in certain markets and different types of asset classes, maybe with specific portfolio structure or metrics in terms of drawdowns or Sharpe ratios or CalMAR. And so we'll work with them to create a portfolio that works for their specific needs. And then we're giving the AI the ability to sort of make those recommendations within that architecture. So it's a little bit more work to originally set up in a fully agentic structure that works day to day. But I think there is an important distinction that for the detail-oriented task that is, it creates a more robust structure whilst using the benefit of the AI to optimize the decision making.
What about predictive capabilities?
So a lot of our prediction is in future business performance and also in the impact of items. So that's where the predictive capabilities are really focused, is understanding how a business will likely perform through scenarios, through different macroeconomic or idiosyncratic events. And that's where we really focus the predictive element. And also we can sort of cross the qualitative into the quantitative element there. So what is the impact of the sort of competitive environment changing as a result of, of AI being released or competitors coming out with new products? What does that then mean as a result? So that's where we really focus the predictive.
Looking for something demonstrable in time, in chunks of time where we could set even a prediction and see how the market follows that prediction. That could be an idea.
Yeah, certainly. So we can definitely provide performance, going to make sure it's set up from a client compliance perspective, that sort of stock tips and where we see performance and how does it compare to a consensus in the public sphere or with investors who are sort of trialing the product. And we can look at analyzing sort of live private opportunities and also seeing how they developed as a result of that sort of evaluation of our technology services.
Nice. Maybe next episode.
Yeah, absolutely.
And you said also some benefits of this could be applied to something like the splitting the pie philosophy, sharing equity among founders, employees, things like that. Reason through documents and provide a suggestion on the equity split of a company.
Yeah, so it is designed to be sort of critical and act as a tool for financial analysts. So from questions regarding how to structure the company or how to make different elements, that is all capabilities that exist within the platform. That sort of just expands upon the business evaluation and obviously starts to enter sort of areas of corporate finance. Actually, the underlying frameworks are highly consistent because at the end of the day, if you understand how the business is set up and how you think it will perform and what's the value that people bring, it does become a sort of mathematical problem that can be solved relatively quickly.
Right. In times that are so much shorter, I imagine that with a normal processing.
Yeah, that's such a, for us, we can make the case, and I think we do very well regarding the value that we bring from the accuracy component and the amount of the different benefits that you receive. But the one that is always going to land with people is the sheer time saving while still being able to actually complete the tasks and how much that time that takes. And for those that are in the VC space, the time it takes to do the initial evaluation, maybe have a sort of simple valuation structure. May have taken one person a day, 2 days minimum to actually look at a company, and we can take that down to 15 minutes, half an hour to complete that work.
Which is almost incredible. But yeah, that's the right use of AI right now. That's absolutely.
Absolutely.
Do you want to show some other parts? I see some other tabs. I don't know if they are.
There's some different elements, but it's probably a different topic of conversation. So it probably ends up confusing people more than providing clarity.
Okay. So for now, we can leave it at this and then maybe update in a couple of weeks.
That would be fantastic.
Great. So thank you for being with us, Andrew.
Thank you so much for the time. I really appreciate it.
This was a pleasure.
Thank you very much.